Today's topic is going to be all about that negotiating and submitting of your first multifamily offer. And I'm going to be specifically talking about large multifamily assets, but a lot of these same principles are carried over when it comes to the smaller properties as well. There are a few different nuances, but for the most part, they are fairly similar. So we're going to break this down into 5 different sections, okay? So we're going to be talking about what you do before you submit an offer, okay? We're going to talk about how you submit your offer, and then we're going to talk about how to negotiate to be able to get the deal awarded to you once you've submitted your offer, especially when there's a lot of competition on that property. And then we're going to talk about some strategies that you can do when you're on buyer calls, which will a lot of times happen when you have a seller that is interested in kind of interviewing a couple of different buyers to see who they want to award the deal to. And then the 5th thing is the kind of the waiting period, okay? And each one of these sections are not very long. So my plan today is to have this material take up about 20 minutes. And then throughout or towards the end, if you have any questions, I'll be glad to answer any of those questions for you as well. So the first thing we wanted to talk about is before the LOI, right? And one of the things that you want to do is making sure that you have your team built out before you start to submit offers, because a lot of times you have to move quickly. And in order to move quickly, you need to make sure that that team is built out to a point where you can rely on them to respond right away. And so one of the most important pieces in this particular stage is going to be making sure you have a property management company in that market already selected, and you also have an attorney selected in that market as well. And then also having an insurance person to be able to give you some quotes from the insurance side of things. And those 3 things are very important, because when you're doing your due diligence and doing your financial analysis and what we call the underwriting of a property, you want to make sure that you have those pieces in place, because the property manager will be able to give you a good pro forma on how they feel like they can run the property. And then the attorney will be there so they can quickly respond to, developing and creating the LOI, which is that letter of intent, it's that offer letter. And then they'll also be there when you have to execute the PSA, the purchase and sale agreement, to be able to, which is the contract to actually buy that property. And then the 3rd one, of course, is the insurance person, and they're going to be there to be able to give you quotes so that when you're doing your financial underwriting and your financial analysis on that property, you'll be able to have better data to be able to make sure that your underwriting is going to be pretty close to where you need it to be when you're actually projecting returns for yourself or projecting returns for a potential investor that you might be bringing on to the project at the same time. And so before the LOI, the letter of intent, you want to make sure you have at least those 3 team players in place. And then what we like to do with our group, so our group is called PassiveInvesting.com. And for those of you who are interested, you could actually go to PassiveInvesting.com. And I'll type it into the chat box for those of you who are on the webinar live. You can go to PassiveInvesting.com and you can see where, if you're interested in maybe joining us passively on some of our projects and kind of knowing about some of the deals we have available, we have a lot of information here about what we do as far as our group is concerned. But you can, on the top right-hand corner, you can click on that, and it'll allow you to be able to put in your information if you want to have a conversation with me one-on-one about passively investing with our group. And you can also see some additional resources here, some of the strategies that we use. And of course, the list of our properties that we have acquired as well are listed here on our website. So you can go there, do some research. You can also see more about me and my bio on the Dan Handford Meet the Team page, as well as the 3 managing partners up top, and then the rest of our team that we have working for us right now as well. And so one of the things that we do with our team, Brandon actually does this, Brandon Abbott, he's one of our managing partners. He actually does what we call a pre-LOI inspection. And I've actually never heard of that before. And so we kind of have to coined that phrase, if you will, the pre-LOI inspection. And that is really where we kind of set ourselves apart and can come out strong with an offer right up front, right out of the gate, because Brandon's background is really knowing about construction and how things are built. And, he used to work for a lot of the large insurance carriers and did a lot of adjusting, if you will, and estimating on what it would cost to renovate a property if there was a fire or a flood or storm or hail damage and things like that. And so he can go into these properties and kind of take a look on the exterior and the interior and kind of see, is there going to be any kind of, gross structural issues, or what about the roof conditions? And he can throw a drone up in the air and age the roof based on the drone footage, and he can get satellite imagery and do measurements of the roofs to see if we do have to replace them, how much is it going to cost us to replace those, and allows us to get really, really close and fine-tuned when it comes to CapEx, or that capital expenditure budget for what we're going to do for renovations, and knowing before we get into the property what are some surprises that we might be seeing. Now, you can do your own inspections like we do like that, but you can also hire somebody locally if you don't have that person in place. Or, like me, before we had Brandon on our team, I didn't know anything about that. I didn't even like doing that kind of stuff. And so one of the things that you should do is you should get in contact with some of your local contractors or inspectors in the area. And they usually don't charge too much to be able to do this, but when you go and tour a property, they can go tour it with you. They can spend 30, 45 minutes to an hour going to that property, looking around. Again, you're not getting granular with this inspection. This is just the overall kind of big picture, anything grossly negligent that you're gonna be able to see, to be able to you might want to change your offer, or maybe even not want to offer at all. And so it might cost you $150 to $300, somewhere around there, to have that person come and walk it with you. But it'd be worth it to you, because you might want to pass on a deal where you might not have seen something in the beginning, and now you're into the deal, and you might not be able to walk away, depending on what kind of due diligence money you had to put up front and various things like that. That piece of that pre-LOI inspection is very important, especially if you're putting in hard money day one. Now, I'm not talking about a hard money loan. I'm talking about the earnest money deposit that you put down to secure the property that would go non-refundable the day you sign the contract. And so in order for us and our team to be confident with those types of offers, we have to make sure we're doing that pre-LOI inspection. Now, still during this before the LOI phase, we want to make sure that we are underwriting that property. Does the deal make financial sense? And making sure that when you're underwriting the project, you're getting pricing guidance, or what is called the whisper price, if you will, from the actual broker who presented that project or that deal to you. To make sure that your asking price is appropriate. Now, many times, in many cases, those offer prices will be way off of what you actually are offering on that the pricing guidance is. Like, you might be wanting to put an offer on something that's, they're asking $5 million, and you're like, I'm at $4 million. I don't know how you get to $5 million. And that's that conversation, open communication that you must have with the broker, so you can communicate that with them. And we always, when we're in that situation, we always talk to the brokers and say, hey, listen, I don't know where the seller is, or this is where we are right now, and we just can't get to that guidance that you actually are putting out there. Do you want us to submit an offer on this one if this is where we're at? And in many cases, they'll say, yes, please submit the offer, because number one, they want to show the seller that they're getting a lot of different offers. And number two, they want to make sure that if the seller is asking way too much, that they can show and present offers that are more realistic to what they might be able to get for that particular property. So let's move on now to the LOI, the letter of intent. This letter of intent is a very important document, but it is a non-binding document. It is basically a document that outlines any terms that you have an understanding with the seller on. So it's almost like a memorandum of understanding, if you will. But this letter of intent explains the terms of the deal, but again, is a non-binding agreement for you as the buyer, as well as for the seller. Either one of you can walk away from that LOI. So it's very important and very imperative for you to get to that PSA signing phase as soon as possible, which is, again, the reason why you have to have your team in place to make sure that you can act very quickly on these different offers as well. So the LOI is that letter of intent. It explains the terms of the deal. The next thing is you've now submitted that LOI. That LOI, that letter of intent, will go to the broker, and that broker will take it. And a lot of times, if they'll sort it out, and you'll get to what's called the best and final stage, if you get to that level. So usually, if there's 15, 20, 30 offers on a project, they'll take the top 5 offers. And then of those top 5 offers, they'll bring them to what is called the best and final round, or the best and final stage. And sometimes there's 2 of those. There's a best and final round, and there's sometimes a best and final round. I've actually been in one where there was a best and final, a best and final, and a best and final. So it just really depends on the broker, and most of the time it's usually depending upon the seller and what they are guiding and directing that particular broker to do. But once you get into that best and final round, if you don't get into the best and final round, the deal's dead for you, right? So you have to just go back to your drawing board, find another asset, see if you can put another offer on a different property. But the once you have been in that best and final round, now you're in that process of giving the seller additional information about you. And one of their number one questions that they want to know is about where the equity is coming from. And so we'll talk about that a little bit later when it comes to the buyer call strategies. But when you're in this best and final round, you're going to want to compete on a couple of different items. So the first thing you can compete on is obviously the price, right? So you can either go up or down on the price. Typically to compete, you want to go up on the price. And then the other thing is the terms. And the terms would be more of the length of your due diligence period. So typically there's a 30-day due diligence, but to compete, maybe you want to do a 21-day due diligence, or maybe even shorter than that. It'll be a little bit harder to do that when you're doing some form of agency financing, whether it be Fannie Mae, Freddie Mac, those types. But when you have a bridge lender or maybe even a local lender, you might be able to move quick like that to be able to compete on those terms. Once you start doing more and more deals and projects, you'll be able to know kind of what that timeline is like. And of course, when you start to compete on that timeline, you definitely need to make sure that your attorney knows. You definitely need to make sure that your lender knows as well, so they can the day you sign that contract, people are moving quickly to be able to set up the inspections from the lender side and the legal side and all of that kind of stuff. And that due diligence process is being started ASAP. Now, the other types of terms that you can compete with is the additional closing timeline, meaning are you going to shorten up the timeline for due diligence? Maybe you don't. Maybe you do a typical, most people are doing like a typical 30-day due diligence, 30 days to close with an option to extend for another 30 days or possibly 2 weeks or something like that. And a lot of times to compete, you can kind of, you can change some of that timeline a little bit. You can say, I'm going to do a 21-day due diligence and 30 days to close and no options to extend. We actually did that with our group on one of our most recent properties. It's a large $51.5 million property that we acquired in Raleigh, North Carolina. And one of the things we did to compete with that is we tightened up our terms. We did a 21-day due diligence, 30 days to close, and no options to extend. So it gave us 51 days to close that property. Now, we do it via apartment syndication route, so we had to raise all that money. Thankfully, we were able to raise the money needed, which was $14 million in just under 2 weeks to be able to acquire that asset. And so things went very smoothly on that particular acquisition. We actually closed a day early. So we were supposed to have 51 days. We ended up closing at day 50 to be able to close that thing up early. And guess what? That seller wants to now sell us more of their properties because they know we can perform. One of the hardest things for a group that does it via syndication is that you don't have a single equity source. You have to raise your money after you get the project and after you get that deal under contract, which can be a little bit of a problem when you're competing with, yes, you got terms, yes, you have earnest money, but you also have a group over here that might actually have a single equity source. And actually for our group, 2 of the deals we lost recently, both of them in December, we got into the best and final round. We were in the top 2, and we were waiting for the call to say, hey, you got awarded the deal, and we didn't get that call because that other buyer was the same terms and around the same offer price, but they had a single equity source, and that single equity source was a big factor for them in being able to get awarded that deal. But once you start getting some more of these projects under your belt, you'll start to have a reputation of being able to perform. So for us, we have the reputation that our group has never got a deal under contract that we have never not been able to close. And we've never got a deal under contract that we've had to extend because of our own, because we were not able to get the equity. There's only been one property that we've acquired that has not been able to close on time. And it was a property that there were some inspections that got delayed and had nothing to do with us. It was actually a problem with the seller not giving us some information, so that we had to do some inspections later on, and it kind of affected the closing timeline. But it still went through for, we already had all the money raised, we were able to close that thing on time with no issues. The next phase here after negotiating the deal is, well, a couple other points that I wanted to bring up here about the negotiating the deal that are coming to mind right now. One thing that I always do from this is putting myself in the seller's shoes when it comes to trying to negotiate a deal. And every time that I've tried to do that, it really seems to bode well for our acquisitions. And so for you always want to put yourself in the seller's perspective and the seller's shoes and say, if I'm the seller, what would it make me want to award you, your group, the deal versus another group? And so you have to think about that and go, what is it from the seller's perspective that would allow that deal to be moved? And so what would it be that would, what factor would it be? Would it be the earnest money? Would it be the terms? Would it be the offer price? What would it, that would make a deal more attractive to you if you were the seller? Because every time I've lost a deal, if I go back and I go, I would have done the same thing. I would have awarded the deal to that other group because we didn't compete the way we needed to compete. But each time you submit an offer, you'll be able to pivot and change. And your very first offer that you submit will be probably the hardest one that you submit. And it's because when you submit that first offer, you kind of have that, oh, great, we actually have to now start to perform on this property. But the more you start submitting offers, the more deals you'll start to get awarded. So the next thing here is going to be, which is number 4, which is going to be buyer call strategies. So when you're in this best and final round and you're in that top 5, usually the broker is going to send out and circulate to all the potential buyers in that best and final round what is called a seller questionnaire. And it's a questionnaire that's usually 2 to 3, sometimes I've seen up to 6 or 7 pages of just question after question after question, asking things like, you know, what about, where's your equity coming from? How did you underwrite the taxes? Can you submit us your underwriting? Talk to us about the 3 most recent deals you closed. Talk to us about where your net worth and liquidity is coming from. Talk to us about where, you know, how many times you've used your equity source. And so they'll ask you a lot of those different questions. And in the next couple of weeks, I'm actually going to be doing a webinar that'll be about this questionnaire and ways that you can answer it and fill this out to get awarded some more of these deals. But when you get on these buyer calls, they'll go off that buyer questionnaire or seller questionnaire, whatever you want to call it. They'll go off that questionnaire and ask you some of those questions to see, number 1, how consistent you are, but also to see how you respond to them in real time as well. So make sure that you are prepared to be able to answer those questions. And the number 1 question that, if you don't get anything else down, that you should make sure you know how to answer is going to be, where is your equity coming from? Because at the end of the day, all those other things are great, but if you can't prove where your equity is coming from, then it's going to be a lot harder to get these deals awarded, and they're going to be more kind of awarding you the deal on faith versus kind of having that track record. And again, sometimes in the beginning, that's going to be hard to get awarded a deal, especially in some of these larger properties. But that's why I suggest in the very beginning, you should join somebody else's group and help them from a money raise standpoint, but also from some of the due diligence process and items, and making sure that you build that credibility in your experience, not just from the seller and the broker side of things, but also from your investors' perspectives as well. And then that last phase, and as I talk about this last phase, if you have any questions about any of the other phases, feel free right now to type them into the chat box. We're going to go straight into the questions and answer session, if there are any, during this, after I talk about this last phase. So the last phase here is the waiting period, which I think is the worst phase of all, because all the other ones, there's things you're doing, there's actions that are happening, and you know things are moving along. But the waiting period can be a few days to a few weeks, depending on how many offers are submitted and how many approvals that the seller has to go through. Because a lot of times, like when we're trying to compete right now in, you know, that 30, 40, $50 million space, we're competing with a lot of REITs, those real estate investment trusts, a lot of hedge funds, a lot of single equity source family offices and billionaires and, you know, various institutional equity people. And a lot of times they have to go through a process of being able to get approvals from various departments and partners to be able to get approval to sign off on the actual sale of your property. So it's not like you're working with a single seller and you can just force them into, you know, awarding you a deal in a certain time frame. And so those are the 5 steps. So before the LOI, during the LOI and submitting it, negotiating that deal after you get into the best and final round, making sure you hone in your buyer call strategy questions, and making sure that you can answer that question very solidly of where your equity is coming from. And then that last phase of the waiting period. And obviously after the waiting period, you're either going to get to know if the deal is dead and you've got to move on to the next one, or if now you get to move on to the next phase, which is that PSA signing phase. So that purchase and sale agreement, getting that thing signed and locked up, and then moving forward with working with the lender and the attorneys on both the lender and the legal side and the seller side to be able to get that deal locked up. So I don't see any questions coming in right now. So if there are no questions, then we will go ahead and close it out. But while I have the recording started here, so we can have it onto the YouTube platform, I do want to mention to everybody about the Multifamily Investor Nation Summit. So you can go to mfinsummit.com. We have one coming up actually next week. I can't believe it's already coming up that quickly. We have the MFIN Summit coming up next week. You can go there, mfinsummit.com, find some more information about it. The one coming up next week is January 16th, 17th, and 18th. It's an all online virtual event. And if for some reason you missed the January event, we do not sell the recordings, so you will have to wait till the June event, which we will have one coming up here in June of 2020, which those dates will be announced at the summit coming up next week. And so you can obviously go to mfinsummit.com and register for the summit coming up in June if you already missed the January one. So thank you guys so much for attending this virtual meetup, and looking forward to having you come to some of our other meetups that we have across the country in the city close to you. And again, I'm Dan Handford, founder of Multifamily Investor Nation. We'll see you next month on the next virtual meetup. And then if you're interested, you can go to the multifamilyinvestornation.com and then type in, actually you can type in MFIN webinar, and that will allow you to register for the next webinar that's coming up. And we have one right now coming up in about an hour and a half. So I will type that here into the chat box. If you have not already registered for that, you can register for that webinar that's coming up on later this hour, or in about an hour and a half at 2 p.m. Eastern today. I'm going to be doing another webinar on capital gains deferral strategies and exposing those and talking about a lot of those. So feel free to go there, register for that, and also head over to mfinsummit.com and register to get your ticket for the next MFIN Summit.